Hello and welcome to the Well Balanced Podcast brought to you by Vector Wealth Management. My name is Jason Ranallo, and today we are going to dive into markets and the economy, and specifically the consumer and retail spending. Two big topics as we get into the holiday spending season. Today I'm really excited to have Kara Murphy, Chief Investment Officer of Bluespring Kestra, joining me for this discussion. First off, though, an introduction. Bluespring and parent company Kestra Financial, as you may be aware, is the firm that Vector Wealth Management is affiliated with. We've been affiliated with Bluespring now for about 5 years, and one of the reasons we joined Bluespring was to gain access to top-tier resources like Kara and her team at Kestra Investment Management. Welcome, Kara.
Thank you, Jason. It's so great to see you.
Now, we've known each other for some time, and you have an impressive background. You are a keynote speaker at industry conferences and a regular contributor to many television and radio programs, including CNBC, Bloomberg TV, and Bloomberg Radio. You also regularly quoted in financial publications like the Wall Street Journal, New York Times, and Barron's. And to top it all off, you were recently named Chief Investment Officer of the Year in this year's Women in Finance Awards. Wow, congratulations, Kara.
Yeah, thank you. Thank you.
Now, we want to get into a couple of charts today, but before we get into that, would you mind just sharing a bit about yourself?
Absolutely. And you know, it's been such a pleasure getting to know you, Jason, and the rest of the Vector team. And I have to admit, every time you and I talk on video, I want a cup of coffee because that area behind you looks so inviting. I'm such a coffee fiend. So next time I'm out to see you, you have to promise me that we'll grab a cup of coffee.
For sure.
But a little bit on my background, you know, I've been in this business for a very long time, but way back when I was actually the daughter of 2 English teachers. So as you might imagine, we spent a lot of time quoting poetry at the dinner table, but we did not talk about finances. And, you know, I learned the hard way during that time period. In fact, just as I was heading to college, learned the hard way the consequences of bad financial decisions, and really kind of struggled to make it through college at the time. And it wasn't until years later that I ended up working on Wall Street that I started to learn some of that financial literacy, understand how markets work. And I found out that I really loved it. But it wasn't until I was able to sort of marry that intellectual exercise of understanding what's happening in the markets with how I help people retire and send their kids to college and all those like wonderful financial outcomes that you guys work so hard to achieve for your clients. And once I was able to marry that like intellectual exercise with those like fabulous personal outcomes for the people that we work with, that's where I get like real joy and motivation every day. And I love that aspect of what I do.
Yeah, that's wonderful. I always appreciate hearing, you know, a bit about how, you know, individuals come into the industry. It's just, you know, everyone's got kind of a different story and kind of what motivates them. And it's been great getting to know you over the years as well. So let's talk about a couple of market economic data points, some charts. One of the things, this is top of mind because we're here in holiday spending season, full swing. Yeah. What are you seeing in terms of retail spending, the consumer? You recently had a interview on Bloomberg TV where you talked about the consumer and how the shape of the consumer is. What are you seeing from your lenses? Any trends that are standing out?
I think the sort of picture of the consumer is very complicated these days. If you look at in aggregate consumer balance sheets, so how much money do people have versus how much they're spending versus how much they owe, those in aggregate look really good. In other words, consumers altogether don't have a lot of debt like we saw, for instance, heading into the global financial crisis. That was a time when people were clearly getting over their skis, borrowing too much to buy bigger and bigger homes. And then all of a sudden it sort of fell apart. We do not have that situation today. Most Americans have been pretty careful in how they've been managing their finances. Every individual is different, of course, but our job is to many times look at this in aggregate. The other piece of the consumer puzzle is the labor market. So how much are people earning? How much are wages increasing? How easy is it to get a job? On an absolute level, if you look at the health of the labor market compared to like the last 50, 60 years of history, the labor market today is very, very healthy. Unemployment's at a low level, wages are increasing pretty substantially. Now, it's a little bit weaker than what it was, say, 6 months ago. So
Hmm.
people are starting to feel a little bit more of a pinch. And then you layer in another piece of the puzzle, which is how do people say that they feel about their situation? And here's where, in some ways, consumer confidence is extraordinarily low.
Hmm.
So you have people who, have decent balance sheets, who have jobs that they feel pretty confident in, but they say that they feel pretty terrible. And that's been a bit of a conundrum, especially when we compare sort of confidence levels to where they were during the financial crisis, which in my mind was a very, very difficult time for many, many people. By some measures, confidence is actually lower today than it was then. So then the real question is, how are people spending their dollars? That's the
Hmm.
ultimate sort of like test of how people are feeling. And there again, the picture looks pretty good. Overall, you mentioned holiday sales are we're at sort of like the peak of holiday sales right now. In aggregate, holiday sales are expected to be up about 3% this year. That's a healthy-ish level. After
Hmm.
inflation, it's about flat. So that tells you that people are still feeling pretty good. They're out shopping. In some cases, consumers are starting to trade down, right? Or maybe before they would have paid for a premium product, now they're paying for something that's a little bit more accessible. But in general, what we're seeing is that consumers are acting like they feel pretty good.
Yeah, it's interesting how they're acting different than what some of the surveys show as far as how pessimistic they might feel. What is, I mean, and I know some of it's survey based, but what stands out from why people are feeling pessimistic, or why, going back to the great financial crisis, are there certain elements that in aggregate that people are feeling about why they're as pessimistic as they are?
Yeah, it's a great question. And we've spent a fair amount of time diving into the detail to really understand. So, the nice thing about some of these surveys is that you can break down by region, you can break down by education level, by
Hmm.
wage level, by age. What we found is that this relatively low level of confidence is pretty widespread. You can break it down by any of those different levels, and everybody's feeling worse than they were a number of years ago. So that tells us that this is not something that's only being experienced by a certain demographic or a certain cohort. Now, the higher your level of education, the higher your wage level, the higher your confidence. So it's
Hmm.
lower than it was before, but it's higher than somebody who makes less than you. So that tells us something. But I really think that the sort of one constant through that period has really been inflation. And when you talk to people, that's often what they go back to. And in my mind, it's really a sign of how pernicious inflation can really be. And folks like you and I who watch this stuff every day, you might look at a chart and be like, but inflation is down. And it is. It's
Hmm.
down very significantly, right? Now we're at about
Hmm.
like 3, depending on what metric you use. That's a very healthy level of inflation. The challenge is that when people go to the grocery store to like buy eggs or steak or whatever it might be, those prices are still much higher than where they were in say 2019. Now they're flatlining, right? They're not going up anymore. So inflation is not continuing, but those price levels are very high. And I think that is the one constant, no matter what your education is, no matter what your wage level is, that you're going to be struck with every time you go to the grocery store.
Yeah, oftentimes we think of it as that rate of change versus that absolute level, right? The things we buy on a consistent basis are getting more expensive, but just at a lower rate, and sometimes that doesn't come out as
Exactly.
clearly in the headlines.
Exactly.
What about, so oftentimes we hear about Santa rally, Christmas or holiday season rally. I heard a stat recently, I think it goes back to, I think it was, I want to say August. Since August, the stock market's up about 19%. And the question was really around, are we going to have a Santa rally this year? And then you zoom out even just as little as 3, 4, or 5 months, and it's been quite strong. Anything in terms of, as you see and look through in terms of retail spending, the health of the market, what the Fed's been up to, um, any indication as you looked at this trend, what the market has been doing lately and how strong the stock market's been, that could continue or may stall out? Anything from your lens?
Yeah, it's so interesting because we've talked a lot about this among the team because I've been in this business 25 years, and the Santa Claus rally was a pretty reliable thing. And then the last couple of weeks of the year, Santa comes to town a little bit early, and stocks go up. But it doesn't happen every year. And this year, as you pointed out, it's been extraordinarily strong for stocks. And I'll add in, it's been extraordinarily strong despite it being an election year. So often what we'll see is that the first half of an election year, stocks are pretty flat and then they catch up in the second half. This year, we've had stock growth kind of throughout the whole year. So, to the more sort of fundamental part of your question, what's driving that and can it continue? When we look at earnings growth among, many different large companies in the US, that continues to be quite strong. We think the areas of the market that are seeing earnings growth will start to shift heading into next year. So think it's been very concentrated in larger names. We think maybe some smaller names will start to benefit from that, especially as the Fed continues to cut interest rates. But in general, many of the things that have driven this very healthy stock market so far this year look to continue into 2025.
Yeah, wonderful.
Whether it's driven by Santa or not.
Yeah, we'll know after the fact, perhaps.
Yeah.
Kara, this has been really great information. Really appreciate you joining the podcast today, and as always, very informative.
Oh my gosh, so great to be here. Thanks for having me.
And now, importantly, also coming up mid-January, Kara, we're excited, will be joining us again. We're going to host a Market and Economic Outlook live webinar. We're going to spend more time. We're going to go over these items we talked about today, as well as other topics and in greater detail. We will follow up with additional details for this event, so please stay tuned. You can also go to our website, vectorwealth.com, and subscribe to our Market Perspective newsletter to learn more. Again, Kara, we look forward to having you back. Thanks again for joining.
Can't wait. Thanks, Jason. Happy holidays.
Hey, thanks for listening to our podcast. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment